So what happens when a company throws a blockbuster earnings party, but the stock decides to, well, leave early?
Yeah, that's a good way to put it.
That's the central puzzle of new holdings we're piecing together today. Is this just some healthy profit-taking, or is the market telling us that even this incredible growth has hit a ceiling?
Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. We're doing a deep dive into new holdings, ticker NU, based on data from November 14th, 2025.
And you really have to set the stage with the macro environment first. I mean, it explains so much of the market's mood right now.
I feel pretty cautious out there.
It's firmly risk-off. The NASDAQ is down about 0.5%. You've got the fallout from the U.S. government shutdown. You have this stubborn inflation and all the chatter about Fed policy. It just makes investors jumpy.
So they're quick to sell the winners.
Exactly. They lock in profits on high flyers like new. And that whole risk-off feeling, it just sets a really challenging ceiling for valuations. Okay, so let's get into new itself then, because looking at our research, the fundamentals are, they're electric. You can see why there's so much hype.
Oh, absolutely. The numbers are incredible.
I mean, a knockout Q3. Record revenue of $4.17 billion. That's up 39% year over year.
39%. It's staggering growth.
And net income also jumped 39% to $783 million. The user base is now, 127 million users? It's massive. And management is pushing this AI-first strategy.
Right, which all points to a fantastic long-term story. But what's so fascinating is how the market is struggling to square that growth with today's price.
How so?
Well, you look at the analysts and they are firmly bullish. I think it's 78% rated a buy or strong buy.
Okay.
But the conflict is the valuation. Our discounted cash flow analysis, it suggests the intrinsic value is somewhere between, say, $10.50 and $14.40 a share.
And it closed yesterday at $15.59.
Exactly. So the price just looks stretched.
Yeah.
It's priced past its fundamental value, even with that AI story baked in.
And that's the real debate, right? If the fundamentals are so good, why are traders hitting the brakes so hard right now?
Because in a nervous market, the technicals and the sentiment, they often beat the long-term story. And the sentiment data shows real caution.
What are you seeing there?
The options market has a put-to-call ratio of 1.14. So for every bet on the stock going up, there are 1.1 I bets that it's going down, or at least people are hedging.
Hedging their bets. And short interest.
It's meaningful. It's about 3.16% of the float. That's nearly 119 million shares, betting that in the short term, the high valuation is going to win out over the growth story.
Let's talk about the technicals then, the chart itself. How did the stock actually trade yesterday?
Yesterday was a big warning flag. The stock dropped 2.8% on really heavy volume, about 37 million shares.
Wow, okay.
And crucially, it closed just below its 50-day moving average. For institutional traders, that's a clear breakdown in the short-term trend.
So the big money sees that as a sales signal.
Yes, and the volume indicators confirm it. We're seeing clear signs of distribution, which is just a fancy way of saying institutional selling. Big players are unloading shares, and momentum is just stalled out.
So when you tie all of that together, amazing fundamentals, a stretched valuation, and this technical breakdown, what's the strategic verdict for an investor looking at this?
We're calling it a neutral stance, but with a bearish bias. The long-term growth story is still there, it's impressive, but right now, the market is completely fixated on that price premium.
A premium that's getting hit by the macro mood.
Right, it's being overshadowed by the risk-off environment, that stretched DCF valuation, and now technical confirmation that sellers are in control. The lesson is, in a tough market, you just can't pay tomorrow's price today.
So what are the key levels to watch, the battlegrounds that tell us if the buyers or sellers are really winning?
Okay, so immediate support is at $15.48. If that level breaks, you should expect more downside pressure.
And on the upside?
The whole bearish bias gets invalidated if the stock can get a decisive close above resistance at $16.30. A break above that would tell you that committed buyers have wrestled back control, despite all these valuation concerns.
So Nuke Holdings is a powerful growth story, no doubt about it, but the market is weighing that incredible momentum against a very high valuation, and for now, it's choosing caution. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.